Well, hello there, everybody. Welcome back to Legal Talk. My name is John Mitchell. As you probably know by now, I am the host of the show. And boy, oh boy, I got some great information for you today. Again, we are still talking about frequently asked questions. These are things that come up. As you know, I'm here in Houston, Texas, tax attorney, and taxes are my specialty, right? So most of the content you're going to get here is all about taxes, right? And that's a good thing because taxes really touches our lives in so many ways. It's really taxes is kind of intertwined with everything in life, you know, fortunately or unfortunately, however you want to look at it. But in any event, I am here to clarify all the unclear things, and I'm here to help with all your questions. And we got this question, and in fact, I've been asked this question many times. What happens? All right, let's say even though it's 2024 and still people are out there getting yellow refund checks. I say yellow checks, right? The U.S. Treasury checks, they're with a Statue of Liberty on it and everything. People still get those. And so sometimes Postal Service being what it is, no shade on the USPS, but they do a lot, right? And so a lot of times a check might get lost in the mail or intercepted by bad people or whatever the case may be, and somehow you did your tax return, you're expecting to get a little money back, you didn't get your check, and so what happens if you do not get that check? And weeks go by, so anyway, if you're getting a check, if you're waiting for a check, that's already, that's going to be a few weeks before that check comes in, maybe 4, 5, 6 weeks, right? But let's say that time is passed and you think, oh my goodness, well, my check is now lost, something's wrong, because if the IRS is not going to send you your check as expected, what they're going to send you is a letter, right? So you filed your tax return, and let's say you haven't gotten either one back. You haven't gotten a check in the mail. You also haven't gotten a letter from the IRS telling you that something's wrong, that you need more information, et cetera, right? So what do you do? What's the first step that you want to do, if something like that happens? Well, the answer is this. If you actually got your check and then lost it, what you want to do is to initiate a trace, right? So the way you initiate a trace is the first thing you want to do in any case is go to the IRS website. That is irs.gov. I know, write that down so you can remember it because pretty complicated, right? Not really. So irs.gov, it stands for government, right? So irs.gov, and then there is a button on the main page of the IRS website, where is my refund? And so click on that, fill in the information, and then that is going to tell you, their automated tool is going to tell you, the information about your refund, right? It was issued, it was sent out, it was not issued, it was sent out on X day, whatever the case may be, right? So first of all, just have that information and know that yes, the IRS has sent out a check, right? So I guess that's the number one thing that you want to first do. And then, so if you check that website and it says that the check has been sent and you haven't gotten it and it's past the time that you should have gotten it, there is an automated system that you can call an 800 number at the IRS. And that number is going to be 800-829. So 829 is the beginning, by the way. I'm going to give you a shortcut here. 829 spells out TAX. 829 TAX, right? So that's a lot of the IRS's phone numbers start with 829. So it's 800-829 and then 1954. And that is an automated system, so you don't have to wait on hold to actually talk to a person at the IRS. You're going to be able to input some digits on the phone. They're just going to walk you through it, and that is an automated system that you can use. Now, the other way to go about it, if you want to talk to an actual person, one of the things that you can do is call 800-829-1040. Take a gigantic patience pill, because it's going to take a little bit of time to get through and actually talk to somebody at the IRS, right? So that takes time, but you can do that. So that that is available. If you think you got special circumstances or whatever the case may be, you can always pick up the phone. It'll take a while, but you will be able to talk to somebody at the IRS. 1-800-829. Once again, 829. That's TAX. So 1-800-829-1040. And that is unlike the automated system. That's got hours of operation, right? And so you can call during normal business hours. You're not going to call it, 2-3 o'clock in the morning, because the IRS folks, they are, not working at that time, right? So you call up the 800 number. You can talk to a person. Now, if you filed a married filing joint return, right, you and your spouse, then you are not going to be able to initiate a trace of your refund check on the automated system. So the 829-1954 number, that is not going to be available. So you're going to have to actually talk to a person, because there's a little bit more to it, and they're going to check, say, hey, you didn't get your check, but do you have any knowledge that your wife or your spouse got your check, right? So they're going to ask a few extra questions, and so you're not going to be able to do it on the automated system like that, right? So if you got the check and you initiate a claim on it, right? First thing the IRS is going to do, they're going to check whether that check, they're going to check whether the check was, ever cashed, right? So now if that check that they sent out has been cashed, that's a whole different thing. But if they review the file, they review the case, and they find out that that check was never cashed, geez, who knows, man? It's, maybe the postal guy, instead of sticking it in your mailbox, he stuck it in the trash can or something, right? Check got lost, nowhere to be found. It was never cashed, though, because, thank God nobody got a hold of it and cashed it. But, if your check was not cashed, then it's pretty easy for them. They can cancel that. So they'll cancel the check, they'll void it, and then they'll send you another one. So that is one way that you can go about it, right? If, however, your check has been cashed, right? You call in the IRS, hey, I never got my check. And then they say, hey, you actually, the check was received by somebody, maybe not you, it was received by some way because somebody cashed it, right? That's been cleared through a bank account. Okay, well, now they are going to send you what is known as a Form 3911. That is, the name of that form is Taxpayer Statement Regarding a Refund. And so what's going to happen then is they're going to send you that form, and you're going to fill that form out and, swear under penalty of perjury that it wasn't you that cashed a check. By the way, when they send you that form, they also send you a copy of front and back of the check that was cashed, right? So you're going to be able to see the signatures on the back. And it ought to be pretty simple. If it wasn't your signature, then you can show them, a sample of your real signature and tell the IRS, look, this is not my signature. Please, replace the check because, crooked people have stolen it and I didn't ever get the money, and that's going to be key to it. But that is going to take a lot longer. So, again, if that happens, then you're going to be not, like I say many times when you're dealing with the IRS, don't watch the clock, watch the calendar, right? So that is going to be, the way that you get a replacement check if your refund check was lost or stolen, all right? So if you need to talk to me about that or about anything tax related, my name is John Mitchell, tax attorney, Houston, Texas, and my email address is jmitchell@cctaxlaw.com, and my telephone number 713-333-0555. Thanks for being with us, and we're going to go to some commercials, and we will be right back here on Legal Talk. Well, welcome back, everybody. I am so happy to have the audience here with us. We really appreciate it. And by the way, I want to just say one thing. If you have tax questions, I'm trying to make this clear always, but I love talking to people, like helping to clear things up and help resolve tax problems. If you got issues, right, feel free always to send me an email to my email address, and I will either one of three things. I'll either hop on a quick call with you, or either I can, maybe email you if it's a little bit longer and more intricate, more detailed. I like to put it in writing so everything's clear. You can go back and read it 2-3 times, whatever you need to do. Or the other thing that I may do, and I do this quite frequently, I will take your question, make it into a segment, and talk about it here on the big show. So I really love to get some participation from the folks out there. If you have tax questions, write to me. I will maybe do my best to get it on the show as an answer, right? Question and answer type format. So I'll do that, right? And one of the questions that gets asked, like every tax season, right? This always comes up and people want to know about this, right? So one of the things that I always get asked, John, what is the maximum age that I can claim my kids as dependents, right? Now, sometimes you got kids that are, living with their parents, God help us, until, 30, 40 years old, right? And so if they're dependent on you, how old can you claim them as a dependent, right? So here is the answer to that burning question for you, right? Okay, so a child, if you have a kid, that kid can be your dependent. The general rule is up until they turn 19 years old, right? So you can claim them up until they're 19, and that is as of December 31st. So if they're still 18 on December 31st, and then they turn 19 on January 1st or whatever, you can still claim them for that previous year as long as they were 18 or under at the end of the year, right? So it goes by December 31st. Okay, so 19 is the cutoff. After 19, you can no longer claim them as a dependent, except for in a couple of circumstances, right? Now, if this kid is a full-time student in college, right, then you can go ahead and still claim them as a dependent up through the age of 24. Right? Because the IRS and the Congress, when they wrote the laws, it's okay, well, maybe kids are going to be, 4 years or 4+ years, maybe 4 years in a semester or whatever, in college. And so you can go ahead and claim that kid as a dependent. So that is going to be what they call a qualifying child. So they are still your qualifying child up until age 24. Once they turn 24, sorry, no dice, no luck, not a child anymore, right? There's still a couple of exceptions to that. The big one being, let's say if your kid is disabled, right? Everything happens in the world. There's kids that are, unfortunately, whatever accident of birth or car accident, whatever it may be, the kid is disabled, or maybe not even that physically disabled, maybe intellectually, right? Maybe they got Down syndrome or something, right? They need that little bit of extra help. They're going to be with mom and dad, for the duration, right? So if that's the case, then there is no age limit, right? So they're not a qualifying child anymore, but they are a qualifying relative. And so one of the things that you can also remember about this, the age is not the only factor here, right? You can't say, well, my child is 18, my child is 17, whatever it may be, because to claim them as a dependent, there's a couple of other hurdles that you have to jump over, right? The number one hurdle is that they actually have to depend on you, right? So if you're going to claim somebody as a dependent, that person has to actually financially, economically depend on you for their day-to-day, right? So that means basically that you have to provide over 50% of the cost that it costs to cost of living for that person. And cost of living can include anything from room and board, all the way up to medical expenses, clothing, transportation, all of that stuff, right? So as long as you're paying over 50% of that person's cost of living, then they actually depend on you, right? So that's one test, right? Now, I said there's a couple of relationship tests. That's either being a qualifying child or a qualifying relative. So you got to be actually related to you, and that could be by birth, or it could be by marriage, it could be by adoption. So it doesn't have to be blood relative, but they got to be related at least, at least through marriage or whatever, right? So if you are if you're gonna claim somebody as a dependent, that is a very important one. You have to do the relationship test, right? Now the other one, so it's age and relationship, citizenship. So the kid that's going to be claimed as a dependent have to be a U.S. citizen or lawful resident, or at least have a social security number, right? Have to have some kind of legal status. The exception to that is, by the way, and this is still a thing, they can live in Canada or Mexico. So if you have kids or even relatives, it could be your brother, sister, could be your parents. As long as you can demonstrate that you meet all of the other qualifications, then they can live not in the United States and not be U.S. citizens. They might live in Mexico, right? I've got clients who take care of their elderly parents, right? So that is that's the thing. They got to usually reside in the United States, but if you reside in Canada or Mexico, then that can work, right? Just be sure that if they reside in Canada or Mexico, that they have to have a social security number, or if they don't qualify for a social, they've got to have an ITIN, individual tax identification number, to be able to be qualified to be a dependent on a tax return, right? And finally, one of the big things also is that now your kid could be married, but they can't file a married filing joint tax return. So let's say you got a kid, he's 22, let's say, right? Just say a number, right? Kid's 22, going to college, whatever. Every other way he qualifies to be your dependent. However, Junior just couldn't wait, and he went out and he got married, right? Well, Junior's married. That doesn't mean he can't be a dependent on your tax return, but Junior cannot now file a joint tax return with Junior's now spouse, because joint tax return knocks him out of being able to be a dependent on somebody else's tax return. So your kid goes out and elopes, your kid goes out and gets married, whatever. Now the days of putting them on your tax return are finito, right? It's over and done with. No more dependent on your tax return. So that's it. That's mainly, now most of the times people ask me about age. So the main thing that I talked about here was age. General age is 19, 24, if it's a college kid, or, no age limit if it's a permanent and total disability. And so that is the basic answer to the question. So if you have, once again, I'll just repeat this. If you have tax questions, you got burning questions, some about taxes that you just have to know. I'm a tax attorney extraordinaire, 30 years experience, Houston, Texas. You can give me a call at 713-333-0555, and I will try and answer your question, answer your phone call, spend a few minutes, 5-10 minutes on the phone with you, listen to your question, try and give you an answer. But the even better way to get a hold of me is to just shoot me an email, jmitchell@cctaxlaw.com, and I will either write you back or give you a call, or maybe if it's a question that I think can be applicable to more folks out there, I will go ahead and take that question and convert it into a question, into a segment here on the big show, and we'll talk about it, and then you'll say, oh my God, pat myself on the back. I sent that question, and now John talked about it on the big TV show. So Again, my name is John Mitchell. Thanks so much for being out there in the audience. Write to me if you have tax questions, and if not, strap yourself in, get comfortable, or well, maybe get up and walk a little bit. Enjoy that big commercial break, because we are going to be right back after these commercials here on Legal Talk. Well, hello there, everybody. Welcome back to Legal Talk. I hope that you enjoyed that wonderful commercial break there. You were able to get up, stretch your legs a bit, maybe walk around, go to the kitchen, grab yourself a cold beverage or warm beverage, as the case may be, whatever your preference is. Get comfy, because we have a treat for you in this next segment. Now, I have with me a very special guest, and we are so pleased and so honored to have this guest back with us on the show. And his name is Jay Menes. He's attorney extraordinary. He's a special kind of attorney, a problem-solving attorney, which is much better than the problem-creating kind of attorney. So you're going to really want to hear what he has to say for you here today. He is a graduate of Cooley School of Law up in Michigan, but don't hold that against him. He's been here in the great state of Texas for 25 years practicing, and he does some really high-level technical stuff, and we are so pleased to have attorney Jay Menes with us. Welcome to the show again, sir.
Thank you, John. It's good to be back. Good to be back. Thank you.
Absolutely. Hey, well, diving right in, we had been carrying on a bit of conversation. We're going to just continue on with that. So you do some very high level, very technical type stuff, right? And so I wanted to just kind of catch everybody up out there in the audience. Whoever's out there watching, you're going to want to know, first of all, something a little bit of a background, right? So could you please, backtrack just a bit, explain to us again, so it's fresh in everybody's mind, what is, again, EPCF?
Well, like we discussed last time, can you hear me?
Yes, sir.
Okay, yeah. Like we discussed last time, EPCF is the special arrangement that's used to fund large-scale projects. It's usually used internationally to fund government projects, to fund private projects that are of large scale. I'm talking anywhere from $100 million to billions and billions of dollars. The E stands for engineering. So we're talking about somebody has to design the engineering of the project to start with. And then the P talks about the procurement, because once the engineering is done, somebody's got to go out and procure and purchase the materials that will be used to do the project. And then, of course, the C stands for construction. So you have the E, you have the P. So the constructor or contractor has to put everything together to deliver a full-scale project on a turnkey basis. But then you have the F. See, the F is the most important, because regardless of whether you have the E, the P, and the C, if you don't have the finance, the funding, the project is going nowhere. So this is why EPCF contracts are very important when you talk about funding large-scale projects. And what happens is, these guys that we call EPC contractors and EPC consultants, such people like my law firm and our team, we put it all together. So you come to us and you say, look, Mr. Menes, we've got $1 million road project in South America. Can we do it? We look at it. If we accept it, we will go ahead and put everything together for you. And at the end of it, your government or whoever you are will get a project, a road that is delivered according to the quality that was agreed on, according to the pricing and everything that was agreed on. That's the EPC F arrangement of funding large-scale projects.
Well, that is so great. That is wonderful information for everybody out there. So that is what EPCF stands for, and I totally agree. I understand what you're saying about the F being the most important one because that is like gasoline in your tank, right? If you have a beautiful, nice Ferrari or a Porsche, whatever kind of car you want to talk about, you got a beautiful, nice sports car, but if you don't have any gasoline in the tank, you're not going anywhere. And just like these EPCF contracts, if you do not have the financing in place, then you're dead in the water, right? There is no project without the financing, and so that's very important, and that's the reason why it's so important for folks to hire somebody, engage with somebody, a professional like Jay that knows how to put the entire thing together. Could you say, Jay, possibly that this is a kind of a thing that you put together where you could be called a turnkey type of a project?
Basically, what we are specialists in this type of work, because being lawyers, we are able to represent the client who owns the project well. So the client, for instance, comes and say, "Look, we need to get this project going. We need a hotel, and we don't want to worry about all that stuff. We just want to make sure that a finally constructed hotel is delivered to us." As specialists, we put it all together. We get everybody on board. The contractor that we get on board is a contractor that will know everything about the project from the E to the P to the C. And then we arrange the F and throw it in there, and the project is on the way.
Excellent, excellent. That is good information right there. That's why it's so important to people to engage. With you, you got very specialized knowledge, lots of years of experience, and being an attorney. Man, that's just the cherry on top. That's the icing on the cake. That's what makes it all come together for people. So now tell me, let's go a little bit deeper and find out for the folks out there what kind of projects are we talking about, right? So what is an EPC contract? What kind of what delve into what kind of things specifically kind of contracts you deal with?
Well, see, that's the thing, because of the specialization involved in this, it's not for every type of project. It's not all projects that qualify for EPCF. For one, it has to be a project that requires a large amount of money. We're talking, like I mentioned, we're talking anywhere from $100 million and up, because this is where it will be worth everybody's time. And these are the types of projects that are very complicated, to where you really need a specialist that knows what they are doing, and a specialist that knows how to bring together all the moving parts. So the project has to be one that requires a large amount of money. It has to be one that is a complicated, it's a complex project. And this is the type of project that mostly will benefit from having an EPC type of arrangement. So that when we go to the financier or to the bank or to the funder and we say, "Look, here's what we are looking at," and the financier is going to be looking at how much does this involve? Are we talking about just a couple of millions, or are we talking about hundreds of millions? Because if the financier is going to take the chance and go to some country where they have never been, they want to make sure that the benefits are what the risk they are taking for going there. And of course, to hedge that risk, they have specialists like ourselves on board. That's why they are going. They are going because they know that we are there with them. We are going there with them. They are not just going by themselves.
Right, and so as a middleman, I mean, I guess you could say you have kind of some obligations on both sides of the coin, right? So if you sign up with, the government of some country or some state or whatever, you're going to do a project, and that project doesn't get done, and let's say it's late, it's not on time, it's not up to specifications, then that responsibility falls back on you, right?
Well, see, that's part of the benefits of EPCF. Now, the risk actually it doesn't necessarily fall on us because we engage a contractor. The construction company, the EPC construction company, actually takes care of all the risk because that's who knows how much it will cost. Our job is to supervise and make sure that everything is done according to schedule and that everything is done according to quality that the people agreed to. Now, if for some reason it's not done according to schedule or the budget overruns, that's the problem of the contractor, the EPC construction company. And that's why this is a very specialized type of arrangement. You don't just hire any type of construction company to do this. The construction company has to make sure that they know what they are doing and that when they did their estimates, that everything is on board. They don't just go in not having a haphazard arrangement in place because if the project overruns its budget, then they're gonna have to eat it up. Or their insurance, of course, they need to have insurance to take care of that kind of stuff. But our role is really to oversee everything. Basically, as the lawyers, we put together the contracts, we put together the documents necessary, and because we are there making sure that everything is done, the financier has a trust, so to say, in us, knowing that we are going to be overlooking everything to make sure they don't lose their money.
Excellent. Well, that is very good information. Now, I tell the folks out there in the audience, man, I love talking to attorney minutes because you know why? Because not every day do I have a conversation where somebody says only a couple of $1 million. So I know that we are dealing with high level folks here, high roller, man, and he's well deserved because attorney minutes, very, very capable guy, expert in what he does. So say folks out there want to get in touch with you, attorney minutes, how might they go about doing that?
Very easy. If they are calling from the US and they want to call by phone, 214-335-6011. If they are calling internationally, all you have to do is add +1. So it will be +1 214-335-6011. To get in touch with me by email is very easy also. You just go to Lawyer Menace at proton.me. Lawyer Menace at proton.lme. That's very easy to get in touch with me.
Very good. Well, Attorney Menace, thank you so much again for being on Legal Talk. We really appreciate your time. We really appreciate your expertise. I know the folks out there in the audience get a lot out of this, and so we really want to just let you know how much we appreciate it. And I also appreciate the audience being out there. Strap yourselves in one more time. Big commercial break coming up, and then we will be right back on Legal Talk right after these messages. Well, all right, folks, man, oh man, we are on the home stretch now, and we have a very special guest. I hope you enjoyed that little commercial break, got up, stretch your legs, whatever the case may be. And we are back now with Attorney Jay Menace, who is talking to us about the very interesting world of high international projects and project finance. And so we're talking with Attorney Menace. Attorney Menace, next question that we have, right? It's been asked, inquiring minds want to know, everybody out there is curious about this. Why is it that, so we talked about finance. Let me back up just a sec, right? So we talked about finance, and that's kind of the most important thing, right? It's like the gasoline in your tank. You don't have the money, you don't have a project, right? So why is it then that the financiers, right, the project financiers will kind of prefer this type of EPCF contract? Why is that?
Well, thank you again, John. It's very simple. Now, remember, the role of the financier is to provide the money. In return for the money, they get their principal money paid back to them, they get their interest paid back to them. Now that's risky, especially when you're talking about $100 million, $200 million, and stuff like that. It's very risky. They can lose their money if things are not done the right way. So the best arrangement for them is to make sure that they have one person that they hold responsible for everything that is going on. And that person is the EPC contractor or the EPC construction company. So, for instance, my firm engages the EPC contractor or construction company, and all the risk falls on them because they have to provide the engineering, they have to provide the procurement, and they have to construct the project and deliver to everybody. And they have to deliver that project on budget and on time, because you know, of course, that if they run above the budget, then money is being lost. If they somehow overrun the number of days that they are supposed to deliver the project, money is also being lost. So, in the mind of the financier, having one person who is a specialist in charge of everything, knowing that this person has done it many times, and knowing that this person is capable of providing all the insurance, all the bonds that are necessary, that gives the financier peace of mind. And that's why they prefer EPC contracts, which brings together everything on a turnkey basis.
That reminds me, of something out of my own practice, right? Somebody told me once, they said, John, I'll bet the IRS hates you. I understand why people might think that, but that's not the case. And here's the reason why the IRS folks don't hate me. Because if they have to deal with Joe Taxpayer, they have to kind of hold Joe Taxpayer's hand and take him along the route where they need to go, right? But if they're dealing with me, I take care of all of that behind the scenes hand holding and all of that explanation, all that stuff. It kind of cuts to the chase for them so that the IRS folks can deal with somebody who's done this before and knows what's going on and knows how to handle the situation, right? And I think that's probably the same type of thing that Jay is talking about here. So the financiers, they've got a lot on the line, right? $100 million, $200 million, a lot of money. They can lose money if things go wrong. So they are more comfortable dealing with Jay Menes and his folks because they know that they have been there and done that. It's not their first rodeo, not their first time to be invited to the ball, and they have danced that dance a few times before. And so they know what they're doing, and that is a level of comfort for them. And I think that's what we're getting at, right? And so, very last question I got for you today, Jay. I know it's a long day, man. You're ready to take off that, suit jacket and relax a little bit. But we got one more burning question out there, man. One more thing that everybody wants to know. Explain to us what is actually the finance portion of this. What all does that entail?
Well, the finance portion of this comes to project finance. You see, a lot of people, they hear about this concept, project finance, but they don't really know what it means. Now, project finance simply means that type of financial arrangement where you fund a project and you get your money back from the cash flow of the project. Simple. Now, if I were to go buy a car, for instance, it may be that I'm using that car for my business. But if for some reason I don't pay for the car, the financier is not looking solely to my business to collect the money. They look at me personally to collect the money. So there is a personal liability on my part. But when you talk about project finance, the financier is looking to the cash flow of the business. And this is probably why before the financier makes a loan to a large scale project, what they are looking at is how viable economically is this project. How much money is going to be flowing out of this project on a monthly basis? Are you guys going to be making enough money monthly in order to pay back the principal and the interest payments every month? If you cannot prove that you are able to do this, you are not going to get the finance, you are not going to get the loan. Again, this is where specialization comes in, because this is what we do. We know how to put together all the documents. We know how to put together all the moving parts to show and lay it down to the financier and to say, look, here's what the project is. Here's where the money, the cash flow will be coming from. And here's how much will be coming every month. And here's how you are going to secure and make sure that you get your money back at the end of every month, at the end of every year, and at the end of whenever you are supposed to get your whole money, meaning the principal and the interest. So we put all that together, and the project, the financier will be convinced, looking at all the paperwork, looking at all the due diligence, they will be convinced that everything has been done and done right. On that basis, they will do the loan.
Excellent, excellent. I mean, I love the way that you brought that home to people, right? You made people understand, because you said, look, it's like when I go out and I finance a car, right? So you go out, you buy a car, whether you're going to use it personally or you're going to use it for business, whatever the case may be, you got that car. The financier, person, the company that financed the car for you, they've got not only your income to count on to get paid back, they've got the collateral, right? But when you have a big project like that, I mean, it is quite a bit different, because it's going to be very hard for, they lent $100 million on some road project. It's quite a bit harder for them to go out into some country, some third-party country, go out there and repossess a road, right? What are you going to dig up all the pavement and bring it back and put it in your bank's vault? No, you can't do that. So you really need it. That's when it becomes very important to make sure that the project is going to be able to demonstrate a cash flow that is going to be able to take care of repaying that debt. Because, I knew a guy in the finance business, because I was in finance years before I was, studied law. And I was in the finance business, and some guy says, look, the thing you got to remember in the finance business is, some people make a mistake. They think that we're in the business of loaning money, and that's not the case. We're in the business of getting paid back, right? So if you don't get paid back, the whole thing was for naught. Right? And so that is where a guy like Jay Mendez comes in. Him and his folks, they're experts in what they do, and they can give the financier that level of comfort so that they can feel comfortable, they can feel confident that they're going to get paid back, and they can write that big check so that your project can become a reality. And that's, like we said, I said it twice, three times before, say it again. If you don't have gas in the tank, you're not going on that road trip. And if you don't have the financing, your project's not getting done. So that is the value add that Jay and his folks bring to the table. So that is about it for today, folks. I am very happy, overjoyed that everybody was with us today on the big show. So happy, appreciative that Jay Mendez was here with us today, sharing some good knowledge and some good experience. We couldn't do the show without you, Jay. We really appreciate it. So thank you very much. And thanks to everybody out there. And we will see you next time on Legal Talk.
Thank you, John.
This has been a Now Media Networks feature presentation. All rights reserved.